All right, guys, welcome to our September 30th edition of This Week in Crypto here in 2022. I'm your host, Brian. We may or may not be joined by Maxim today, our founder, but we have a lot to discuss today in terms of all of the various ups and downs over the past week. It's been a unpredictable week, we should say, as many of the weeks lately have been. We, of course, saw the big CPI report happen last week, indicating that inflation was still very much a concern. Prices plummeted right after that announcement was made. And since that time, we've seen a little bit of clawing back. And we'll go over exactly why. I want to remind everyone that we are not here to give investment advice. We're simply pointing out the data and metrics, letting you make your own assessments based on the divergences that we have seen from previous instances where metrics have looked similar to now. And that said, looking at the prices and exactly how things have fluctuated, it almost looks as though Bitcoin and Ethereum have barely moved. They're both up about 2% in the past week. But as you go down the line here, the market caps, as the market caps lower, you'll see a lot more volatility. You start to see big breakouts. Cosmos dropped 8%. Quant up 31%, Chili's down 12%, Maker up 18%. They're all over the place, depending on how their fundamentals look right now. And some have been able to be predicted, some have not. Obviously, XRP has been a big story. They had a big decoupling yesterday, but overall, they're about even because they dropped to begin the week and then made up ground again to end this past week. So we're going to go over several of your requested assets here on the call. Mostly we'll try to focus on Bitcoin, and as the title states, we're going to look into the dollar a bit because the dollar has been surging while equities have been plummeting, and crypto is kind of stuck in the middle right now. So some think that there's a positive correlation between the dollar and Bitcoin. Others think it's a complete inverse correlation. The reality is it kind of changes course as the wind blows a little bit, and we have to figure out whether right now it's a positive or a negative one. So we'll get to that in a moment. Before we do, just to name a few other assets that are showing some intrigue right now. We talked about Quant and XRP, but also keep an eye on Maker. We have some news that we're going to be breaking today about MakerDAO that is likely impacting the price a little bit. Nexo has pulled a serious amount of WBTC out of MakerDAO, and that's a very important point. Helium up 14%, Pancake Swap up a modest 8%, Cardano down 5%. It continues to see a ton of negative sentiment, but it seems to just not matter right now with the way that crypto has not been able to recover since its plummet earlier in the year. So Cardano is one where we're keeping a close eye on because the narrative is starting to change, and even some of the diehards are starting to drop out of Cardano and begin to show interest in Uniswap, Chainlink, and some others. So as far as social volume goes, we can see that Bitcoin is being talked about a little more than it was a week ago. Ethereum has barely moved. Tether seeing a lot less discussion, USDC a lot more, Binance Coin and XRP both down. It's surprising about XRP because it's still very much in the news, but I guess we can interpret this as XRP had a huge week of social volume last week, and even though it's still being talked about a lot, it's not quite as much as the initial impact when the SEC and Ripple were looking to negotiate a settlement deal. We can also see Dogecoin social volumes up quite a bit, and DAI is up quite a bit as well. So that's it as far as the screener goes. Why don't we look at a little bit of some of the stuff I prepared in terms of the dollar. The first thing is this post here by Crypto Noob 1 that he put up about 5 hours ago. And it's interesting. So what he's doing is overlaying the dollar on TradingView, the actual dollar value. And the higher up it goes, he's interpreting this as a buy signal, and when it's low in the range, this is a sell signal. And it's not fully explained as to why he believes this. Clearly, he thinks it's kind of an upward band that should continue to grow over time. That's, of course, an opinion. It doesn't necessarily mean that he's right on this. But I find it interesting because if we look at where the big rallies were, so for example, the very beginning of 2017, all the way up until mid 2017, he's viewing this as a buy signal. That was correct. However, right here, it starts to go below, and obviously the big correction in Bitcoin happened right around here. So he's essentially correct, because once it gets down here in 2018, this was where the bear market started. And then it was kind of in the middle all the way up until Black Thursday, really, where the dollar started to plummet right there, go all the way down. And he's viewing this as a sell signal, even though this was where Bitcoin was really, really ripping. Bitcoin was going like this at the time. And now the dollar, of course, is at its highest point pretty much of the millennium, of the 2000s. And he's viewing it as a buy signal. It's been a buy signal, according to this chart, since like May or so. But obviously, crypto has not gone up since May. It's gone far further down. So there is some holes in this analysis, but it started quite a conversation on Twitter nonetheless. Now, we have an opposing view here on Cointelegraph. On Cointelegraph, now note that this is a couple months old, but what they did was they did a study on the correlation between Bitcoin and the dollar. And over time, when the blue bars here go negative, that tends to be a negative correlation. And when it's up here, we have a positive correlation. So far in 2022, it's been all negative. So these are the times in which crypto is supposed to be going down, and these are the times where it's supposed to be going up. The problem here is that Black Thursday started right here. Bitcoin was going absolutely nuts from Black Thursday all the way up until the end of 2021, which was right around here. So it's kind of gone both ways. They have another chart here. I hope it's large enough for you guys to see it, but this graphs the actual dollar price here in teal versus Bitcoin's price here in purple based on percent changes. So obviously they're not on the same axis. And then NASDAQ also, you can see the correlation that NASDAQ and Bitcoin have had, especially since 2021, when a lot of equities traders started to cross over into Bitcoin. With the dollar being up this high, you can clearly see there's been kind of a negative correlation. I mean, honestly, going back probably to 2017, you can see the plummet here in the dollar started to show a rise in Bitcoin. They both kind of went down temporarily here, but look at how the dollar started to rise when Bitcoin was really struggling to really gain any momentum. And then once it plummeted here around Black Thursday, that's when Bitcoin started to rip upwards. And the argument is, you know, Bitcoin USD is probably the largest, I think it is the largest trading pair in the world. So just by default, if USD is going down, that means that Bitcoin's value is going up just from that trading pair, because it's literally Bitcoin divided by dollars. And a lot of people make the assumption, or just rest assured, that the dollar is kind of the stable one compared to Bitcoin. And of course it is. The dollar moves way less than Bitcoin, despite this chart making it look like the dollar is more volatile. But Bitcoin is going to benefit whenever the dollar goes down. And it's going to lose a bit of traction as the dollar goes up, unless the market cap is just blossoming while the dollar is going up, which it's not right now. We're having less and less participants in Bitcoin, which is impacting the price negatively. So I think this is definitely worthy of a longer discussion. I don't want to take up too much of this call, but you know, you can see a lot of other interesting analysis with US swaps markets. repricing to a lower rate scenario right here with the post-June FOMC. You know, they called Bitcoin bottoming out in 2022 in this article, or at least they're making that proposal. I think there's a lot to uncover here, and you'll see over the next couple of weeks. We're going to try to unwrap a lot of analysis about how the dollar is impacting Bitcoin right now, especially with, you know, the FOMC making so many major tweaks to inflation rates and exactly how the U.S. economy and the world economy will be functioning moving forward, and that's having a great impact on, I shouldn't say great as in positive, but a significant impact on Bitcoin and the rest of crypto right now, and should stay that way until we at least start to see a bit of a correlation break, which we'll show right here. So we posted about this just yesterday, but there is a bit of a correlation break going on right now. You can see throughout the year with the S&P in blue and Bitcoin in green, they've stayed very tight together. You know, they started to break a little bit in late July. The S&P then came back down and kind of matched where Bitcoin is again. But check out just the past week. You can see a very big separation that occurred right here just yesterday, where the S&P plummeted, but at the same time, Bitcoin started to grow. This is one of the biggest breaks we've seen in quite a while. And, you know, as we have said many times on these calls, Bitcoin thrives best when it is not reliant whatsoever on the S&P or the equities markets. No inverse correlation, no positive correlation, just Bitcoin acting completely independently from how equities are looking. And there are some signs that that might be going on right now. So it's worth keeping an eye on. You know, you could see this one that happened earlier. I think this was Monday evening, my time, Pacific time here in the US. Bitcoin really ripped while the S&P was closed. And then as soon as the S&P opened, it started positive and then went super negative. And as soon as it had this huge drop, it just took down Bitcoin's price along with it. And Bitcoin continued to plummet even into the after hours of the next day. So what we want to see is Bitcoin thriving while the S&P is closed, which it did a little bit here, but hasn't really shown too much other than that day. And if we start to really rack up those days of Bitcoin moving up while the S&P is not moving, that's a sign that Bitcoin is just really dying to start rocketing upward. So let's keep an eye on that together, and you'll see more posts on that over the next couple of weeks, along with posts about how Bitcoin's correlation is against the dollar, which is of course not the same as the S&P. Make sure. In terms of social trends, so we've looked a little bit at some various terms over the past week. We think that, you know, the buy the dip graph here is very interesting. You can see that as price has really bottomed out, there's been a lot of talk about buying the dip. There have been a few attempted rallies, but nothing has really gathered thus far. That's completely normal. You know, you'll very often see big spikes and buy the dip, and it'll look like there might be a very small sign of it happening. And then the price continues to drop down until people get quiet about buying the dip, and that's when the rip happens. And so that might be happening again right now. We're starting to see a little bit of silence about buying the dip. And if people stop getting euphoric about this being the bottom, that tends to be when the bottom actually happens and prices will start to rise. So keep a close eye on buy the dip. And also, if I type in a few positive words here, I'll do buy or buying or bought or bullish. And I'm going to compare that to sell or selling or sold or bearish. And I'll put them on the same axis. Let's just look at the last week. Now check this out. See how there's been kind of a steady rise in social volume, but especially on the red sell end, the negative end. This indicates that there are a lot of people who don't believe that the price is going to be going up. So we've had a few various cycles in the buy side of things here in blue, but nothing even close back at the beginning of this week compared to where we are now in terms of sell calls, these big bright red spikes. You saw a lot gathering right here in particular, and it might be hard to see with the colors clashing, but this was essentially the local bottom that occurred yesterday. And as soon as it really started to bottom out and was plummeting, you saw lots of sell calls, and then boom, we see this nice bounce. That's exactly what we look for with these sentiment related types of alpha metrics. And I think it's very much worth keeping an eye on moving forward. We'll probably have another post about this coming soon. All right, moving on. Why don't we look at some Bitcoin metrics now? It's been somewhat of a quiet week for Bitcoin. Like I said, it's only up 2% in the past 30 days. Yeah, it is just 2% right now. And even though many other altcoins are kind of fluctuating to and fro, it all goes back to how Bitcoin is doing. They're always going to be the leaders in terms of where markets move next and how much altcoins are able to thrive or dive. So beginning here with circulation, we see that the circulation has continued to stay low in terms of the past 6 months. This is pretty much at the lowest level we've been. And if we even zoom out to the last year, it goes back to about, I think 2020, the last time we got this low. So yeah, we're looking at right at about 1 year lows right now, September of 2021. And yes, the price did have one final rip up before crashing back down just as fast. But when circulation is low like this, we take a look at the NVT chart. You can see that it isn't quite keeping up with the market cap, just like it wasn't a year ago. So September 2021, same thing, big red bar. We had one final rip up until the very beginning of November before it crashed down. But this is a long-term indicator. And typically when you see a bunch of blocks of red forming, prices do tend to move down. Blocks of red forming, prices tend to move down. And then once you see green, that's when prices tend to move up. Right here, here, not here at all, right? Because this was kind of a special circumstance where prices were moving up during the red and dropping during the green because there was some makeup ground, essentially. Because prices were kind of buying extra time while there was no circulation, an equal event had to occur even when circulation was starting to rise and people were trying to buy the dip. This was kind of a special circumstance. Now here, this part was interesting, going from April to June, when we were seeing plenty of circulation related to Bitcoin, and prices continued to fall after each CPI report showed more inflation, and FOMC decision added more interest rates, making it harder for the economy to thrive. This was kind of the point in which it was clear that Bitcoin was attaching more to how equities were fluctuating than actually its own ecosystem, and how circulation and daily active addresses are supposed to lead the way and push prices up when they're healthy, push prices down when they're unhealthy. Now we're starting to get to a point where the FOMC decisions and the CPI inflation reports, they're getting kind of baked in most people's minds, mine included. And when that happens, we're going to start defaulting back to what these signals look like. And right now, it's showing red. So we aren't quite seeing justification for prices to jump back up to something like 30K. Doesn't mean it can't happen, but it means, all things considered, going back historically, when crypto isn't being completely controlled by equities, red is not good. And when we're not getting enough circulation, as this is showing, it's really hard to see a big breakout. As we were going into October and November of last year, when things were starting to pick up, that was allowing Bitcoin to propel up one further time. But for now, we have to be a little careful. And just to compare, we'll touch on Ethereum a little bit later on this call, but Ethereum is seeing a lot more circulation in comparison to its market cap. It was not very good in July or August, but after the merge happened here in mid-September, Ethereum started to really circulate, and a lot of unique tokens were moving from address to address. So that's looking a lot better right now, but we'll get back to Ethereum in a little bit. Going back to Bitcoin, we can see that daily active addresses remain pretty neutral. There's not too much to say about it other than the fact that it is rising a bit since late mid-July, which is nice to see. It's just nothing significant enough to put it on the same level that we were seeing in the first half of 2021. Moving down to our MVRV metrics, we see that the 30-day MVRV is just about break even right now at negative 1.9%. However, the 365-day MVRV is not so good. It's at negative 41%. And when we say not so good, we're actually saying that this is bad for traders who have rode the wave down, but good for the opportunists who are looking to add on to their positions or create a new position in Bitcoin with so much other trader pain going on the long term. Because when MVRV is way down in the negatives, no matter what the time frame is, that means for that same time frame, there's some opportunity and there's some undervaluation forming. And so even though there isn't really any undervaluation on the short term, the 30-day time frame, there's plenty on the 365-day time frame. And if we go back the last 7 years or so and look at the long-term 365-day MVRVs, it really only got down below this level once, and that was back in 2018 at the very end. And yeah, that was where the bottom occurred, because right after it started to really shoot up. And many bulls on this call are hoping to see the same thing now. Odds are that a shoot up is much more likely than another crash on the long term. But we have to still combat things like very declined and suppressed circulation right now, underwhelming daily active addresses, and plenty more that we'll get to. As far as the funding rate goes, let's zoom back in. We'll do just the last week. So we've seen a pattern here with funding rates. The negative funding rates here tend to lead to price rises. And then when it gets overly positive, we'll start to see a little bit of wavering. If you just look from here to here, when the funding rate was positive, see how the price actually moved down. So we don't want to see a lot of longs. We'd like to see people continue to short the markets like they did here, right as the bottom hit and then price rose, and right here, right as the bottom hit and then price rose. So we're seeing this pattern where the funding rate grows and grows and grows until a big crash. You can see in the red here too, the 8-hour funding rate. This was the high for the 8-hour funding rate on Binance and BitMEX, and then a big drop off. And then people start to short, prices rise, and the funding rate is basically always trying to liquidate whatever the common notion is. So when everyone is high, longs get liquidated. When everyone's low, shorts get liquidated. And right now we're back around even, but if we start to see Bitcoin start to rise just a little bit, like a gradual climb like this, you'll see that the funding rates are going to start to follow, and that is when you see these big drops. So ideally, we want to see the price grow without people getting greedy and starting to do these 10x, 100x leveraged longs, trying to ride up the very short-term wave, because then they get crushed and a big price drop happens to punish them. So prices need to be able to rise without the crowd expecting it, if that makes sense. Take a quick drink here. Any questions popping up just yet? Doesn't look like it. Can you check chart for Peercoin proof of stake after ETH merge? There was some activity. Yeah, we could take a look at Peercoin toward the end of the call, absolutely. All right, so we touched on funding rate. Let's now zoom out again. Look at the whale transactions over the past 3 months. Nothing really special. In fact, it's actually lowering a little bit lately. The whales in Bitcoin are very much inactive right now. When there is activity, it's mostly going down. We'll skip down and look at the 100 to 10,000 tier here. That's number of addresses, excuse me. Let's look at the supply distribution. Okay, so the past year is not great at all for whales in Bitcoin right now. You can see that at the beginning of or 1 year ago, I should say, they were holding about 49.2%. They got to as high as 49.5% before they drastically started to take profit here in late October. We had one final leg up as they were taking profit before a huge plummet began, and it has rode all the way down to where we're at now. And that would be 45.7% compared to 49.2. So we're talking about a 3.5% drop of supply by these key stakeholders who have the most say in where prices move next. So the question is whether this big dump that they have made is kind of baked in at this point, or whether there could still be more pain. At least for now, they're doing a very short-term accumulation. If we zoom in just in the past week or so, let's try that again. Shift. There we go. So the past week, right about here, you can see it was continuing to drop just until the 27th, 28th, and we've had a very small climb since, where they reobtained about 0.09% of Bitcoin supply, which is a decent chunk. But just looking at the past 2 weeks, still a downward overall line when you zoom out there, and we want to avoid that and really start to see some pushing and accumulation by the whales. So if this is sustained for like a week straight, then we're going to start getting excited, and it might indicate that a turnaround is coming up here in Q4. But that's going to be a wait and see for now. Now, in terms of the overall amount of addresses, just to see if that differs at all, let's take a look at a few individual ones: 10,000 to 100,000, 1,000 to 10,000, 100 to 1,000. And we'll just take a look at these three together. Now, the red line is going to be mostly exchange addresses. When you look at 10K plus addresses in general, there are very few human active addresses that are just constantly fluctuating their supply. It's a lot of just exchange addresses that are holding a ton of Bitcoin for the purpose of liquidity and allowing people to trade without much slippage. But if we go down to the yellow line here, now we're starting to look at some of the top tier real human addresses that are making decisions based on market conditions and real world events. And it's pretty clear that they had way more back here 6 months ago, 2181. It's about 2,200 addresses back here in mid-April compared to where we're at now, 2028. So since that top, I hold down shift, 171 less addresses from 1,000 to 10,000 Bitcoin. And then in blue here, this is kind of the main primary whales. 100 to 1,000 is a good chunk of the people who just control the markets. They're all still millionaires, all the way up to tens of millions of dollars. So they have a lot of control, and there are a lot more of these addresses. And if we look at where they were a year ago, 13,693 compared to 13,760. So they actually have improved by about 67 addresses. And the long-term trend is nice. You do notice they've started to drop a little bit just in the past week, though. From September 22nd until now, there are 84 addresses less. So it's kind of a mixed bag. I tend to put the most focus on the percentage held I think that's a little more important than just the raw amount of addresses that exist. But both are still very valid. And if you combine both of those for your analysis, you'll tend to find some good alpha there. And right now, it's still pointing to nothing too great for the bulls until this line starts to show some positivity. It's very tough to be too excited because the whales have to play a part in pushing prices upward again. And while we're here, let me quickly switch over to Tether because there is some positive news on this front.
Brian, we had a question regarding funding rates. Could you show which ones you combine to your own metric?
Yes, I'll come back to that in just a moment. Let me just show what's going on with Tether. Get rid of this. Get rid of that. And we're going to look at just the 100K to $10 million addresses and what they're doing right now. So this is the past year in terms of how much Tether is held by the key Tether sharks and whales here. They were accumulating up until early May, and then huge dumps ensued. They finally started accumulating back in early August, and for the past couple months, they have actually added about $461.5 million of Tether. That's still a far cry from the amount that they dumped, which is 2.86 billion over that same stretch. But it is good to see that there's some buying power coming back into these shark and whale hands, because that implies that they can quickly add more Bitcoin whenever they feel like doing so, and that will bolster Bitcoin's price. All right, now going back to that funding rate question, let's see here. So funding rate, when we look at the 8-hour funding rate, and I'm going to open this, we're looking at 4 different exchanges altogether: BitMEX, Binance, DYDX, and FTX. They all have essentially an 8-hour interval that we can look at that shows the fluctuations. If I highlight just the red, you can see what's been going on for the last 6 months. You can see the faint green line in the background. And typically when you see these big low 8-hour funding rate spikes going down, that tends to be when price bottoms occur. When you see them up really high, that tends to be when the price tops occur. Now, if you're interested in more granular data, I'll have to zoom into the last month. The 1-hour funding rate, there are only 2 exchanges we have that actually update their funding rates every single hour, and that's DYDX and FTX. And just like with the 8-hour funding rate, when you see these 2 exchanges really start to show high positive spikes, that's when the tops occur and prices fall. When you see them down low, that's when prices start to rise here. So I hope that answered that question. And heading back to Bitcoin now, let's look at the last year. We already touched on whale transactions and whale distribution. Ratio of daily on-chain transaction volume and profit to loss. So I've actually got a template for that that's a little easier to see. I'm going to go to load, type in ratio, click on this, and this is going to show us both Bitcoin's and Ethereum's weekly ratio in terms of volume and profit versus loss. When you see these high spikes, just like in funding rate, that tends to be where tops occur, as we saw here in late March. When you see the bottom ones, you'll see a bottom occur shortly after in most cases. You saw it here the week after the merge for Ethereum very clearly, and Ethereum has risen ever since. Bitcoin's been a little more flat as of late. You do see that as of the start of this week, we're seeing a very negative ratio. So a lot of people are transacting at a loss right now, and they're capitulating. They're basically saying, I don't care if prices, creep up a little from here. I'm tired of waiting for Bitcoin to rebound and go back up to 30K and above. I'm just going to drop out. So they're trading out their Bitcoin at a lower price than when they got it. And that's going to trigger a negative ratio. And there are more of those transactions than positive transactions where people are taking profit. So this is actually the most negative week so far that we have seen since mid-June here. And right after this spike, you'll notice that's where the bottom occurred and prices started to move up. So that could be a good sign if this ratio stays low and it starts to act similar to this one or this one, where right afterwards prices were able to rise. It's not always the case. You'll see that this negative spike led to a drop. This one was a rise. You know, that most of the time, the big negative spikes are going to be followed by a rise, and that's a good thing. That's what we look for. Nothing is a 100% certainty when looking at these fundamental metrics, but overall, you know, if you're looking at something where 80% of the time it comes true, those are pretty good odds and something that you can factor into your trading decisions. Heading back to the main template. All right, so mean dollar invested age, very little activity happening. Dormant tokens are not really being moved at the moment, as we saw with the whales and the lack of whale transaction spikes. That would make sense. What we really want to see is something that looks a little more like this, where there was a huge drop in mean dollar invested age, meaning the time in which investments stayed in the same portfolio are starting to get younger because a lot of dormant tokens are moving. And when that happens, you see price action that looks something like this. Even back here in April 2019, when things were really starting to bottom out and things were looking pretty gloomy in 2018 and 19, April started to see this big drop in mean dollar invested age, and prices were able to rise. We're hoping to see a repeat in that. You'll see the curve is starting to flatten out just a tiny bit, which is a good sign. And if it starts to slant down just a little, watch out. That could be the beginning of the dormant token movement that we need in order for Bitcoin to rise. Network realized profit loss. Let's zoom back into the last 6 months. Mostly negative spikes, as you would expect with prices dropping. But nothing extreme here. If you see these extreme negative spikes, that's when the bottoms tend to occur. That's about all I can say. There's not too much else we can say in terms of realized profit and loss right now. Exchange flow balance, it is moving down. Let me overlay supply on exchanges here. So you can see that it is dropping. Just in the last couple of days, we had another big drop here. And that's why you're seeing mostly outflows the last couple of weeks at least. Overall, we're still in a very good stretch where the supply in exchanges has gone from about 10.5% in mid-May to about 9.2% now. So roughly a 1.3% drop in supply, Bitcoin supply in exchanges is actually quite massive. And the lower it gets, the more likely there can't be another future huge sell-off because there's simply less Bitcoin on exchanges to sell. Social dominance and volume. So this is a big one. Volume, you can see, is pretty much flat. We can ignore that for now. And let's take a look solely on the dominance end. Look at the last 3 years. So you can notice an immediate trend in social dominance. Over time, it's definitely dropped. It really dropped here in mid-March when everyone was trying to jump on the altcoin train as Bitcoin was trying to rebound from its big plummet in late 2021. And when very few people are talking about Bitcoin, that's generally bad. We like to look at around 20% here as our key. where anything above is good for Bitcoin, anything below, or good for crypto in general. Anything below, you can expect to see some volatile price action and further price plummets. And you can see right at the top in mid-November or early to mid-November here in 2021, when Bitcoin hit its all-time high, look at how social dominance was now below that 20% threshold and prices were plummeting. We did see a jump over right here. Prices were going up during that time. Another jump over here that at least stopped the bleeding and there was a little bit of a rise. And then after this big drop here in mid-June, we saw a big social dominance surge, and that is where prices started to rise again. But now, you know, it went back below 20% right here, and prices have gone down ever since. We had a tiny little peak above here, but it's back below right now. And we have to take it day by day. Ultimately, we need the crypto altcoiners to be a little less excited about the latest and greatest SH coin and a little more focused on what is driving crypto, which is of course Bitcoin and has always been Bitcoin. So this is another wait and see right now, another negative sign, because we're only sitting at about 13% of discussions related to Bitcoin, when 20% above is what we need to typically see. Weighted sentiment, another very important topic. Mostly quite negative right now, which is a good thing. Typically when we're in negative territory, prices will rise. When we're in super euphoric territory, prices will plummet. We've been going lower and lower pretty much since mid-July. So for 2.5 months, we're getting negative sentiment almost, I mean, throughout the year, really. We've seen mostly negative sentiment with a few huge euphoric spikes here and there on some positive news that sometimes comes to fruition, sometimes doesn't. But yeah, overall, this is a very good sign that we're continuing to see people doubt Bitcoin, talk about it less and less. If we look here on our social trends page and we just type in an asterisk, go to the last year, and we clearly see that since the all-time high level, there's been less and less and less participants in Bitcoin, or I'm sorry, not Bitcoin, just in crypto talks in general, other than this big spike here, and then another huge drop down. And then look at this big plummet that happened just about a month ago to the day. And we're now back basically to our lowest levels since December 2020 in terms of the amount of discussions. And that was, of course, just in the midst of a huge rip up, actually. If we go back to 2020, we don't need to see the bars load again, but you can see what happened. This is when the social volume is last that low, and look what happened when there were way less people contributing to discussions related to crypto. Here you can see it loaded. Yeah, that's when the big rip up occurred. Another big rip right here. People were starting to doubt it after a big drop, and then boom. So overall, it's not the worst thing in the world that there are less discussions, especially because that lends to weighted sentiment being as negative as it is right now. And that pretty much recaps Bitcoin. Just to do a quick flow through Ethereum as promised. Let's do that, and then we're going to start taking some questions. So trading volume for Ethereum, nothing special. It's been pretty flat. Obviously, the merge happened right here, but it didn't really get the huge volume spike that many expected. Circulation and daily active addresses. We can see daily active addresses has been dropping. This was merge time. We saw a slight uptick, but nothing too special. On the circulation end, same thing. Big spike around merge time, and then it dropped back down. We already mentioned that the big rise in circulation in the middle of the month is what allowed this signal to be bullish for September after 2 straight months of bearishness before that. moving down. Taking a quick look at the funding rate for Ethereum, it's actually quite interesting. Let me move the axis down just a tiny bit. Same here, we'll do. Okay, so now we can see the majority of the big extremes. We'll look at the last month here. And check this out. Huge negative funding rate right here that happened after this plummet a couple days before the merge. But when the merge actually happened, there was a slight rise, and the yellow funding rate here, the 1 hour, that actually went back positive just briefly. And as soon as people went long, another big plummet had occurred, right? And it's been mostly negative ever since, which has kept the price from really plummeting too much further down. It is going back neutral as we speak right now. You can see the 8 hour funding rate has actually been positive. So it kind of has gone both ways, where just Binance and BitMEX, they've been positive, but FTX and DYDX have been more negative. So they've kind of neutralized each other out. But we're waiting to see an extreme right now, and there really isn't any. The funding rate is pretty much break even at the moment. Whale transactions, you can see they've continued to go down mostly. Not too much to say other than right around merge time, where we had an expected spike in big transactions. And it's been mostly big addresses that have been dumping thus far, and I'll prove it right here. If we look at the 10,000 to 100,000, 1,000 to 10,000, and 100 to 1,000, and we mark the merge, which was right here. It was actually right on it. You can see the addresses all had a big shift, and some debate that this could have been because a lot of the big addresses were moving into a large assortment of staking addresses, which would be this orange line. But you can even see that in the orange line, they were moving down in terms of percentage of supply held ever since the merge happened. So that theory doesn't really hold water either. It doesn't look like the Ethereum whales have continued to dump at the very least. You know, this blue line in particular, it's starting to even out. These are the sharks. And then the yellow and red lines, which are more whales, they've been chopping over the past week after the initial week of dumping right after the merge happened. We already touched on-chain volume and profit to loss, mean dollar invested age. Flattening out a tiny bit, but nothing that we can get too excited about just yet. Dormant tokens are still staying mostly dormant. Network realized profit loss, nothing really to say there. Supply and exchanges, this one's been interesting. I'll go to the last year. Exchange flow balance, nothing too exciting, so I'll remove that. But supply and total on exchanges as percent of total supply, it's actually been moving up, which is different from Bitcoin since late April. There was about 12.4% of Ethereum on exchanges then, and there's 14.5% now. So 2.2% of all Ethereum has moved back to exchanges. You can see a few big spikes here. And when there was a big spike in supply and exchanges, that's where the drop happened, because obviously when coins move to exchanges, it's really only for one purpose, and that is to sell, or at least consider selling. And that looks like exactly what happened right here. There was a big sell-off on the 13th, a couple days before the big merge, and then prices dropped. So yeah, right now, it still looks like the supply and exchanges is pretty high. We'd like to see it really start to move down like it was back here in late 2021 and even moving into the first half of 2022. Social dominance, not as important in Ethereum. It's kind of flattened out after the big spikes around the merge. And it's pretty much in a normal range now. Weighted sentiment, also not really that negative. It is just slightly. for Ethereum, but nothing really too exciting to say there. And until that changes, it's going to be more eyes on Bitcoin and its negative sentiment right now.
We have a suggestion for a metric for ETH. That would be 2-year dormant circulation. Oh wait, we have dormant coins and circulation. I'm not sure which one Danny means. Then could you specify?
Two-year and what? Just this by itself? Got it. Yeah, so we've seen some big spikes in 2-year dormant circulation. The biggest one, of course, occurred at the merge. This was the biggest spike since really the all-time high level back in mid-November 2021. We've seen a minor spike here, but nothing too out of the ordinary. I'm curious what your intrigue is with this metric, Danny, because we've seen a few spikes, especially near the bottom, that happened back from like June to late July. But yeah, let me know what you're thinking there, and I'm happy to dive into dormant circulation a little further.
He mentioned that there was some great alpha to be found for local tops.
Yeah, I think it goes both ways. Dormant circulation kind of works as a volatility indicator, where when you see it pick up, the direction of the price often shifts and moves in the opposite direction, sort of like age consumed. And you can see it both ways. You can see that it worked well as a bottom indicator here, and then well as a top indicator right here, right before the merge happened. Right now, this would be considered more of a downtrend. So a spike here would be good and more indicative of a rise happening. That said, it's not the biggest spike in the world, so it's hard to put too much credence in it just yet. But yeah, that being said, we're a little over 50 minutes into the call. I'd love to take some asset requests so we can dive into a few that you'd like us to take a further look into.
Okay, maybe we can have a look at Peercoin first. I don't think we have on-chain data for it, so it's going to be quick.
Yeah, we'll have just a few things we can look at for Peercoin.
And then we have a request for reserve. That's RSR.
Sure. All right, so Peercoin. Let's look a little more zoomed in here. So starting with trading volume, there's been a huge pickup that it looks like occurred about 3 weeks ago, 2.5 weeks ago. And I'm not too familiar with Peercoin, which makes sense because it's the 643rd ranked market cap asset and doesn't have a ton of history. But its trading volume.
Oh, it actually does.
Really picked.
I think it's going back to 2014 or something, like way
14.
back.
Oh, did I have that wrong? Oh, my mistake. Yeah, I apologize, guys. So yeah, this one's been around a very long time, and it's gone through its share of huge fluctuations way back in 2018. This was a couple of months after, or maybe 1 month after, the then all-time high of about 19.8K for Bitcoin. So Peercoin was able to get over $8 then, had a huge drop. Whenever there's big trading volume, that's obviously a lot of traders trying to hop on the train and get in on the price action. Over the past year, we saw the big trading volume spike occur right at the all-time high for Bitcoin and Ethereum, and then it dropped off, continued to drop off until this month, where we're seeing the biggest spike in trading volume since last year. So that's probably why it's being requested and why people are taking a closer look at it. But trading volume has dropped off mostly. Since then, we had a slight rise here, but it's fairly dormant here. That doesn't really mean it's a positive or negative sign. Let's take a look at how sentiment is looking right now. Okay, so social dominance. It doesn't look like, let's go last year. It doesn't look like there's a huge amount of discussion related to PPC anymore since the big spike in mid-August. You can see that the spikes are mostly occurring as prices are rising. That tends to be when smaller altcoins get the most attention. And when there is a big spike, it's usually pushing the price down. This one had a bit of a spike. We had a huge social dominance spike here. People were probably trying to buy the dip, and it didn't work out for them. This one occurred right before the local top, and then prices moved down again. So right now, social dominance is back to pretty much the normal level. But let's take a look at weighted sentiment. And we'll put this on a 1 week scale. Okay, so this is interesting. It looks like we're at a very negative sentiment point for PPC, which is a good thing. Pretty much the lowest level since January 2022. You'll notice that the big spike that happened recently, just about 3 weeks ago, this occurred right as the price was topping. So this would have been a good signal to take profit, just as this major one was back here in November 2021. People were trying to buy the dip for PPC. And because there was so much positivity, price moved down thereafter. But being in a negative spot right now, it does look like there's a particularly high level of doubt from PPC traders that the price can rally. And that is a good sign. It makes it much more likely that the price can indeed begin to move up again. So thanks for the recommendation on PPC. It's not one I've looked at here on Santiment before, as indicated by the fact that I didn't know it was around since 2014. So thank you for that. The other one that was mentioned, what was that ticker again?
RSR, so reserve is the name. Yes.
Okay, so this is an ERC20 and we'll have plenty of data on it. Let's dive into volume first. It looks like trading volume is a very clear top indicator for RSR, which is the 97th ranked market cap asset. So this is a top 100. And when volume gets huge, that tends to coincide with a price leg down right afterwards. And right now we're seeing another big volume spike. A little weary of because, as mentioned, these volume spikes usually lead to a drop down. I think it's going to be very important to keep an eye on just how high this volume spike goes. If it starts to drop down, then the pain might already be over because it's moving down a little bit now. Zoom in a little bit, just the last 3-4 weeks. Yeah, so big price top, big price top, big price top on all three volume spikes. And if this stays down, we're okay. If it jumps up again, watch out, and we could see another leg down. Daily active addresses and circulation, huge circulation daily active address spike, I should say, in the last 6 months. Still not comparable to the ones that occurred in January, but that kind of skews the axis. Clearly, there's a lot of movement going on right now on reserve, and we need to figure out why. Circulation, not as much. Let's skip down, and then we'll come back to MVRV. So what's going on with this big daily active address spike? It does look like, so the price of RSR is pretty fractional. So these probably wouldn't even be whales. It would probably start at like the 10K plus addresses. And it's interesting, they have been accumulating since late July, which is a good sign. They don't hold very much of the supply. This is a very centralized asset, it appears, based on the fact that the 10 million plus addresses hold by far the most. I want to overlay price on this chart. Okay. So yeah, price is moving up slightly over the past month, which is better than most assets. And you can see right before price started moving up, these small addresses or not small, but shark addresses, I should say, have been starting to accumulate, especially the 100K to 1 million tier. And they own about a little over 1% of the supply. The blue line owns 1 to 10 million of the supply. So they've both been moving up pretty quickly. The orange line, they had their big uptick right here. It didn't really affect the price too much. And it doesn't look like the orange line in general has much of a say on where prices move next. It looks like the blue line. I mean, if we combine all these, it's probably the best. So if we combine just the 100K to 1 million and 1 million to 10 million, there's a little bit of alpha we can see. It's, you know, they were dumping going back to late October pretty aggressively, and then started accumulating about a month before the bottom hit. And then they continued accumulating even after RSR was dropping off. Had a huge dump here, which is interesting. That didn't really impact price. And now they're accumulating again. So, I mean, going back like way, way back, just to take a peek at what they're doing. Yeah, I mean, we can see that the accumulation stopped right when the all-time high hit in April and May. So the fact that they're starting to move up again is a good sign. It's certainly not at the same aggressive rate that they were back here. But yeah, clearly these two whale tiers play a major factor in price going up. And it was dumping pretty aggressively here, now moving back up. So I like the looks of RSR, the fact that it's starting to move back up ever since early February for the long term. Going back to MVRV as promised. Last 6 months. So the 30-day MVRV expectedly is in the positive range at 18.5%. The 365 is still negative at negative 25. So short term, we're more likely to see a little bit of a correction, but long term, there's still a lot of meat on the bone for prices to rise. So that's something to keep in mind. Whale transactions, not a lot going on right now. A little bit of activity on the 100K plus transactions, but nothing major. Interesting to see a lot of 1 to 10 coin addresses rise very recently for RSR. Daily on-chain volume and profit to loss. Not too much to say. It's looking pretty break even right now. Mean dollar invested age, not a lot of dormant coins moving. Network realized profit loss, not much going on there either. Supply and exchanges looks pretty good right now. It had a big drop off here in mid-July. This was around the time when the whales started to accumulate. And it's moving in the right direction. If we go back like 5 years just to check out what's gone on historically. So they actually used to have way less supply and exchanges. It peaked in June, as mentioned, and then dropped back down to about 10.5 now. I'd like to see it move back down below 10% as a good sign that that RSR can't have too many future massive sell-offs. Social dominance, there was a bit of a rise with it being one of the better performing or best performing assets in the past month, at least among the top 100. It's no surprise to see that it had its biggest social dominance spike in about a little over a year, but it's moved back down now to a pretty normal range. Weighted sentiment, let's move back in. Big positive spike here, pretty much flat now, not much to say there. And that's RSR. I hope that was helpful. I appreciate the suggestion, not one we've looked at on This Week in Crypto before. So let's take one more asset before we conclude here, Bearish.
In that case, let's take a look at BUSD, so the Binance stablecoin.
Sure.
Danny mentioned that there were some big outflows, I think.
Always fun to look at some stable coins here on our calls. So trading volume doesn't look like there's too much of a climb. It has been a little more active here in September compared to the previous couple of months. Yeah, daily active addresses is certainly picking up over the past week. We saw a huge spike back here on the 27th. This was the largest spike in daily active addresses of the past year. And even the past 3 years. Was this the greatest spike of all time? Yeah, it was. So yeah, just a couple days ago, there were the most unique active addresses on BUSD ever. And that likely means that there were some internal Binance addresses at play, especially with less and less participants in crypto right now. It would not make a lot of sense for traders themselves to suddenly be really active in BUSD. It's got to be Binance doing a little bit themselves. If we do this really quick, I'll remove circulation because not much is going on there. We're going to switch to Bitcoin's price really quick and see if BUSD's address activity had an impact. Let's see. We're going to lock the price really quick and go back to BUSD. Switch that back to green. That's what we're used to. And then here, we're going to switch to 24-hour address activity. Okay. Let's go back 6 months or so. So biggest address activity spike of all time. This occurred, if we really highlight that hour, right at Bitcoin's bottom on the 27th. So yeah, it's very likely that this had an impact on all of crypto when the BUSD spike happened. Obviously, these spikes here didn't have nearly as much of an impact. Prices barely moved. I guess you can say they sort of happened as the bottom hit, but it didn't really move back up thereafter. This one, though, we're going to have to see. I mean, I'd love to check back in a week and see if this largest spike of all time in address activity ended up coinciding with Bitcoin's official bottom on the 27th. It remains to be seen for now, but I think that's very significant, maybe even something we can post about. All right, as far as stable coins go, whale transaction count, nothing too special going on. So even though there was a huge amount of address activity, they weren't coming in the variety of massive transactions. In terms of amount of addresses, interesting, there was a big drop in 100 to 1,000 addresses. That didn't even occur on the same time frame as the daily active address spike. The 10 million plus ones have been fluctuating quite a bit, going from 15 to 22 back to 20, where it sits now. Yeah, not too much alpha I can extract from that though. Let's take a look at the key BUSD stablecoin addresses. So if we look at 100,000 to 1 million and 1 million to 10 million, these are usually the really good stablecoin whale and shark addresses to keep an eye on. So let's lock these really quick and then switch to Bitcoin. So yeah, the yellow line in particular, look at how the yellow line has been moving down as prices went down and then recently started to move back up here a little bit, and prices have at least creeped up just slightly. We can see that when the bottom hit, a lot of BUSD accumulation occurred, And that even occurred as the price had that final leg down in June. But it's a good sign overall that these whale tiers are up significantly from where they were 6 months ago. If we see last year, yeah, so it's been a little more of a roller coaster here. You can see the buying power really decreased right after the Bitcoin all-time high and then started to accumulate here in February. And the buying power is almost back to where it was back near the all-time high levels. So I'd call that a pretty good sign for BUSD. Not really relevant to stable coins, that metric. $1 million invested age. I need to go back to BUSD really quick. So $1 million invested age is starting to creep up. It had that huge drop here where a lot of dormant tokens moved. Didn't really affect the price too much though. Network realized profit loss, nothing too special. Supply and exchanges is up, interestingly, and that's actually a good thing for stable coins and stable coins only. For all other assets, you'd prefer that supply and exchanges is moving down, but for stable coins, you want them staying on exchanges because that is for the purpose of buying, not selling. We can go back to, let's do the last 3-4 years. And I'm going to lock this and bring up Bitcoin's price one more time.
Dom mentioned in chat that Binance recently announced that all of the like other stablecoins that are put in, USDC and USDT, will be converted to BUSD in the backend. So they changed something big in how they handle this, and that is probably the reason for a lot of the activity changes.
I wonder if that was related to the big address activity spike on the 27th. And if you remember, if that was when it was announced, that would make a lot of sense. But regardless, we see that the overall amount of supply of BUSD has gone up pretty significantly since April of 2021. Yeah, almost double what there was back then. And that means more buying power on Binance, which is always a good thing. It really hasn't gone down at all in 2022, despite prices plummeting. So yeah, buying power still looks pretty good here as far as the amount of supply that's sitting on exchanges right now. And then last but not least, let's look at sentiment, because with that announcement, there probably was an impact on how BUSD is being perceived.
It doesn't say in this text that was shared when the announcement was, but it's supposed to, like, the change is supposed to hit on the 29th.
Okay, so gotcha. So yesterday. Interesting. Yeah, as far as social dominance goes, not really a major amount of discussion related to it. So people, unless stablecoins tend to have some like cataclysmic news, like Terra USDs earlier this year, or even Tether when it was temporarily depegged down to 95 cents. It really just doesn't get as much social hype as it should. So yeah, not much of an impact there. And then weighted sentiment, it looks like it's just not getting a lot of discussion. When it's just slightly in the negative range like this, it usually is indicative that people just aren't talking about it too much. So yeah, good suggestion on BUSD. We found a couple of very interesting tidbits there. But yeah, that said, I think we touched on quite a bit here today. I hope this was helpful to those of you who are watching. Appreciate those of you who are still with us. As always, make sure to like and subscribe on YouTube here. It always helps us with the algorithm. It lets us know that that we're talking about the right things and we can reach a wider and wider audience. So I hope that you can spread the word. Make sure to use your referral links so you can get 25 to 35% of anyone's signups on Sandbase. And I wish you all a wonderful weekend. Thanks for sticking with us, and let's get into Q4 here with a bang. I'm looking forward to a very exciting month. I'll talk to you all very soon.